Hey there, everybody. It's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared here. My daughter got me this mug here for Christmas for these updates, so thank you very much, McKinley, and so happy to be using these going forward for the updates. Well, welcome to 2018. Hope you guys had a wonderful holiday season. Hope you had a great New Year's Eve and New Year's Day, and I hope that 2018 has started out well for you. Rates have not started out well in 2018. Rates finished the week a little bit worse than where they ended last week. No big movements there, but just a little bit weaker than where they ended last week. And the big news really causing this is the stock market. Once again, it keeps setting all-time highs. Yesterday, the Dow Jones Industrial Average hit the all-time high of 25,000, and just a few short weeks ago it was at 24,000, and it was actually the quickest 1,000 point gain ever in the stock market. So that positive movement in the stock market has been bad for interest rates. And we also did see the employment report come out today. So it's the first employment report for 2018, and here's what happened. Expectations were for about 185,000 jobs added to the economy. And actually, a lot of market participants were really thinking that it could end up being stronger than that because of some earlier ADP reports. But it actually surprised the market to the downside. Only 148,000 jobs were added to the economy. So it was much weaker than expected. The unemployment report, the unemployment rate came in unchanged at 4.1% versus the previous report, and that was just because there were more entrants into the labor markets. So even though we added 148,000 jobs to the economy, it did not affect the unemployment rate. We did see average hourly earnings come out, and that also today is a part of this report, and that's an important thing because it shows is there inflation pressures, and the average hourly earnings rate was unchanged from the year-over-year number from the previous month, and so that shows that there's not a whole lot of inflation. So typically, if we would have seen this surprise to the downside on the jobs report, that would have helped interest rates, and it did not. Interest rates are not really feeling any positive effect from that, and that just shows that there's some underlying weakness here to mortgage-backed securities, bonds, and interest rates. Just with the stock market doing so well, that's causing some pressure here, and we're going to need things to change or reverse to show any benefit to interest rates. The other thing that is affecting interest rates a little bit more is that, as you know, in October, the Federal Reserve announced their plans for tapering their balance sheet, and they started with buying about $4 billion less per day of mortgage-backed securities and bonds, and now that has increased to about $8 billion less for their buying. So just less buying in the market, and a better stock market has caused interest rates to suffer a little bit. We'll let you know if that trend continues. We'll keep you informed as always. Hope that you guys have had a great start to 2018. If there are any great business ideas that you would like to implement here in 2018, we'd love to help you implement those and also help give you ideas. If you're working this weekend, so are we. We're happy to be out there helping any of your clients that are looking to buy property. And if you have any questions, please feel free to give us a call. Thanks for joining me with Java with Jared, and we'll talk to you soon, and happy 2018. Bye-bye.